Everything you will see in this video has been written down and been uploaded to a Notion. That link will be down in the description so you guys can click on that for free and keep it open while watching this video to understand the model even better. We want to make profitable traders, not have people complicated or confused. Please comment down below if you guys have any questions about this model. If you guys want to contact us directly, I will also leave a Discord link down below so you guys can join our server for free. Hope you guys enjoy this video.
The MCR is a 22-minute range that gets created 6 times a day, forming 6 profiles. These are the timings for MCR. Let's talk about how we're going to use this MCR. We can see price broke away from our low of MCR. We then had price pulling back into the range. One thing I want you guys to take into account is that 70% of days are going to be false days, which means that if it only closes on one side of the MCR, it is a true day. But if we close on both sides, it is a false day. So if there's a 70% chance that price might close on the other side after we confirm, we're going to always be waiting for that reaction from the range to get our first trade, instead of just entering on that breakout once it closes below the range the first time. If we draw out our edges of the range, we're going to clearly see where price found rejection. So we had the breakout, we had price coming back into the range, we had it react from the top edge, and then we had it have a candle count to trade lower. We then went back into this range, and then this original 0 candle that reacted away from the range gets reacted on again. We have a new candle count going lower and trend following suit towards the DCR. Let's look at another MCR example. Here we have coil MCR. Let's draw out our edges. We can see we confirmed above coil MCR. We then had price pulling back into the range and then having a candle count above this original candle that pulled back in. Once we closed above this candle, we saw price pulling bullish, but we did come back to the MCR range. One thing that we can do in the future is looking at these wicks. Do we close below the fortification at the top? No. So that means this is going to be our first reaction. So we're going to take that as a 0 candle. We do have a candle count right here. And then from this candle, we have price going bullish again. Now that we understand what the MCR is and how we can use it, let's refine our entries a little bit. We have something called fortification. It is the wick gap that is supporting the MCR. It is not the wick gap that is inside of the MCR. You see the difference? On the one hand, we are looking at price rejecting off of a wick gap, which means that once we close below that wick gap, we can confirm the narrative. So it's not just looking at the breakout from the MCR range. It's looking at how price is reacting from outside that range to support the narrative idea. We see price failing to close below the MCR, reacting off of this bottom wick gap. We then do close below it, and then where do we react from? Our fortification. What do we do once we close below the fortification again? We react from it to go lower. What do we do once we close below the fortification again? We react from it to continue lower. Now that we understand the concept of what an MCR with fortification on its edges is, let's look at something a little bit smaller, something that we can use internally of that MCR to see directional bias. This is called the Nano Range. We have now turned on our Nano Range. It is going to be a 6 candle range from the start of MCR. We can count this out. 1, 2, 3, 4, 5, 6. It's going to be a high and a low. And this is the same thing as an MCR. If you guys have ever traded quarterly theory, all we are doing is taking the first quarter and then trading price around the first quarter. So if you break that down, you're going to get a nano range from the microcycle range, which is what MCR stands for. So if we have that very tiny range, we can see price broke out of the range. We then came back into it and then reacted away. You see how clean that looks. What did we do at the top here once we broke this bottom fortification? Where did we react from? The Nano Range. We are currently looking at another example for Nano Range inside of New York AM MCR. We have our 6 candles high and low. Let's see what price does. We close below Nano, reacting off of our fortification from our MCR, price failing to close lower. But what did we do once we touched inside of our Nano Range? We fully rejected out and then confirmed on our MCR. Where did price react? On our fortification. You see how everything starts coming together? What did price do once we closed above our MCR and our fortification? We came back down and then reacted from the Nano Range to go higher. Understanding where to trade is going to be one aspect in trading, but I don't believe that will just make you profitable. We need to understand when to trade. In our server, the biggest question is, when will the reaction hold? When do I start looking? So we implemented a 32-minute window in our tool to help our people stay out of really bad price action. We call this the manipulation zone. Let's look at the first example for the manipulation zone. Let's look at the timings. If the MCR is a 22-minute range starting from 9 o'clock to 9:22, this is just one specific profile, the manipulation will start 8 minutes after the close of the MCR. And that's going to extend for 32 minutes. It's going to include the market open for that range. And then it's also going to include the 10 a.m. or usually the 30 minutes after the market opens. There's a news folder. It's going to include the 2 candles for that news folder, trying to keep you out of that manipulation. Let's look at the size difference to price on its ranges inside of manipulation comparative to outside of the manipulation. Once we reacted from the Nano Range, closing below it, how far did price go down? Around 60 ticks. Once we started looking for buys, reacting from this DCR, I'm going to explain that now. 90 ticks. How far did price sell after that, reacting from fortification outside of manipulation? 115 ticks. How far did price go reacting from this DCR below? After manipulation, we almost went 300 ticks. Looking at our second example for the manipulation zone, we can see during manipulation, we closed below the MCR, but never closed below the fortification for the MCR. We then had a candle count confirmation to go lower right here on this candle, but everyone going in for sells got stopped out. We're trying to trade outside of our manipulation zone. See how clean price action became outside of our zone? Once we confirmed above, we had a reaction to go higher to the top of our next area of interest, which would be the next edge of MCR, which is the top. But we never closed above it, so we didn't confirm for a false day. This doesn't mean look for buys. This means continue looking for sells till price has a candle count above our fortification for the top of MCR. So if we're still looking for sells, you had all of this that you could have traded. But it's okay. Now you didn't enter. We just had price confirm below our manipulation. The same way we trade an MCR. What did price do from the edge of our manipulation? Look how beautiful price action happened to play out. Now that we understand the when and the where in trading, I want us to start asking the question, how is our trade going to confirm for that to happen? There's one more aspect that I want us to add, and that is called standard deviation to our MCR levels. So I'm going to quickly open up my settings so you guys can see the settings for the standard deviation. So please pause the video so you guys can copy it and have it on your screen. The rules say 70% of days, depending on the confirmation, can be turned into a false day. So how do we know when it is a false day? We have an area that we can expect price to reverse from. It's going to be from the 0.5 to the 1.5. If we get a candle count or a failure to go lower than any of these levels, with a wick, with a candle count, a reaction, whichever way you see it, that is a confirmation for price to try and go to the other side of the MCR. Just want us to look at this. We have price rejecting off this bottom wick, creating a candle count out of standard deviation 1 to go to the top edge of MCR. We're looking at our secret profile just before our New York AM. Let's draw out our standard deviation levels without fortification on our range so we can just see where price is reacting from. Let's draw out our reversal zones in our standard deviation, which is going to be everything up to the 1.5. Do the same thing above and below. And here we're going to see price show a clear example of how we can reject from our reversal zones on both sides of our MCR. Another tip is, depending on where we reject, if we reject off the 0.5, the 1, or the 1.5 in our reversal zone, we tend to trade to the opposing standard deviation. So seeing that we rejected off of the 0.5, we trade it all the way to the opposing 0.5. If the MCR, the nano, and the manipulation ranges are all aspects that we can use on the lower time frame, how do we know where they want to go intentionally? Here is 2 aspects on the higher time frame that I need you guys to use. It's going to be the 1800 opening line of the day, meaning that if we're going to be above that 1800 line, we're probably going to sell. If we're going to be below this 1800, we're probably going to buy. And then the second aspect is going to be the DCR for the week, and this is how we're going to trade them. Let's look at our first example for the 1800 line. We have secret MCR confirming for a true day. We have manipulation zone that we do not trade. We don't trade until price confirms above the manipulation zone, which we just did. We then have price coming back into this range to confirm all the way up to the 1800 line where price ranged and then reconfirm to go higher on. And this is going to be the opening line for the day. In this next example, I'm going to show you guys how price reacts from the 1800 instead of using it as a drawn liquidity. After we used it as a drawn liquidity in our manipulation zone, we can see price confirmed above it and then had a reaction from the 1800, creating this larger wick where we kept on reacting off of to go higher into our DCR for the week. We're currently looking at the DCR example for coil MCR. We can see that price is currently confirming above the DCR. And then as we come back, we react from the Nano Range, acting as the top support for this DCR to go higher. If we look at the 15-minute, we can see that DCR for that week right here was created between 6 o'clock and 11 o'clock on a Monday afternoon. Looking at the higher time frame for DCR on the 15-minute, we can see price confirmed below the DCR. We then traded lower, using it as a drawn liquidity for price to go higher. We failed to continue higher once we closed above it, trading below the MCR, confirming to go lower again. We then used it as drawn liquidity. After price confirmed to go higher from the reaction of the DCR, we came back into it, used it as drawn liquidity, and then kept on reacting to go higher until we created the new week just above. The next aspect of higher time frame trading that I will be explaining to you now is going to be profile trading. Every profile we see in front of us is built off of the reaction from the MCR itself. We're going to have 6 MCR ranges throughout our day, indicating that we're going to have 6 profiles as well. Every single profile's direction is depicted on the reaction of the edge of every previous profile. That probably does not make sense. Let's visualize this. We have the 1800, the coil, London, secret, New York AM, New York PM. We see London closing above coil. The opening of secrets biased is bullish. But we failed to close below London.
So once we do, we need to start putting this into perspective. This is the lowest support point for price to go higher. If we fail here, what is the next point for price to react off of? It's going to be the previous low of the previous profile. Not this low, not this low of a doji, it's the low of the profile. If price fails there, where's the next area that we can react from? The low of this profile. So now we're starting to build areas of interest for price to range in between, depending on confirmation. We can already understand where the bias of the day is going to go. So seeing that we closed below London, the initial bias would be bearish, which it did, until we came to our next area of interest. Did we close below that? No. So that's already signing to me the same that we signed right here, that we're probably going to go bullish. I'm going to draw the wick of this current low. And if we close below the wick right here, we have confirmed that we want to close below this point of interest of this previous profile. And then we're going to trade to this low. Did we close below this wick gap? No. We had a candle count directly after that, where price traded out of the DCR, reacting from our area of interest, supporting the middle of the DCR to go higher. Now look to our right. All price is inside of this current New York AM profile. Now everyone right here is going to try and do the same thing. They're going to draw the edges of every single profile right here and say, no, but there was a breakout. Why isn't price going up? Why are we stalling? Wait, no. But here's a reaction from the top. Why is price ranging after we closed lower? Guys, we're trying to trade an edge. We're not trying to trade the middle of it. So if we look left, what is the edges? Let's clean this up a little bit more. We still have this same edge that we failed to close below. So this is my new edge. What is my top edge? The top of this profile. Because we never closed above it. We failed to close above it and pushed down with a candle count. So if we just looked at our edges, how many trades would we have taken? 1, 2, and where did price end up? At the other edge. The last aspect of the MCR model I need you guys to understand is going to be candle counting. You guys have heard me speak through this video about we have a candle closure, we have a zero candle. I need you guys to understand that that is the last part. That's the last thing you should be worrying about. That is going to be the entry model. All that a zero candle really is it is the candle that we're going to be using to react from our area of interest. We're going to use this low of this previous profile. We can see price failed to close lower than that profile. So we're going to use this wick of this candle. It's still in manipulation phase, so we do not trade. We see the 15-minute candle failing to close below that candle. So we do not have an indication that we want to continue lower. So this is the new bottom support for that candle. We are then going to wait 3 candles. So if this is candle 0, this is why it's called the 0 candle. Then you have the 1, the 2, and the 3rd candle. Within 3 candles from your 0 candle, it will indicate a trend. It will indicate the trend for that time frame. So seeing that we're on the 15-minute, whatever candle count we get here, it will be the candle count for the 15-minute time frame. Okay. So what do we get? How many candles does it take for price to react out of our area of interest, which would be the Monday DCR, the low of this previous profile, and then also the low that failed to close below the profile? How many candles did it take for us to react to indicate that we wanted to go higher? It closed above the 0 candle in 1 candle, reacting off the bottom wick of that same 0 candle, the same way that we would react off of the wick or the edge of a MCR. So this would be the entry, stops below that same candle's low, and then you would target the top edge. We're looking at the second example for the 0 candle. This is the candle that hit the bottom edge of our area of interest. We're going to draw a high and a low of this candle and then see within how many candles did it take for us to close above this candle to indicate that we want to go bullish. So it took us 5 candles, which is above average on that 3. So I'm going to wait for price to come back to our 0 candles area of interest, or at least touch the 0 candle and then have another 0 candle from that same candle that touched our area of interest to see if we still want to continue bullish to confirm on our bias. So we have price touching the bottom edge of that 0 candle. What we can start doing is taking these candles and drawing a high and a low from them to indicate which one would be the 0 candle from the reaction. We do not trade any sells if we get closures below, because then we would have to be below the DCR, trading into the DCR, and then using every candle as candle count to go lower. So we're only looking for buys right now. So we have a candle closure lower. So we're going to use that as our new 0 candle. So within 3 candles, we closed above our 0 candle that reacted off of the edge of the original base candle, which is going to be the 0 candle that touched the bottom of the edge of the previous profile and then the DCR itself. So we can go in for buys, stops below that same candle's low, and then we target the top edge. And we can see price opened above our take profit. Let's do one example, putting everything into one. Before we start at our next profile, let's look at our previous profile's edges. So we have the top edge and the bottom edge that is going to support the narrative of this profile. If we fail at this top edge to close higher, I want to target the below edge. If we close above this, I'm going to expect us to react from this edge and then continue higher. But to fit with the narrative that we want to keep selling, what can I see? We have the 1800 below price, and then we have the Monday DCR below price. So currently I'm feeling that higher time frame wants to draw price lower into these areas of interest so that we can probably trade higher. Let's see how price forms as we go through forming the 22-minute MCR. We see price going below, confirming from the Nano Range, trading back into the Nano Range. We just finished the MCR and we're going to wait until the manipulation starts. So manipulation is starting, pushing price to confirm below the MCR. We can see on the 15-minute, we have started creating candle counts to go lower from the original 0 candle. And then we have the top edge supporting that original 0 candle on the 15-minute, being the top of the previous profile that we failed to close above on. Coming up to the end of manipulation, I'm going to wait for price to react back into this original 15-minute 0 candle on the 1 minute. And then we're going to wait for a candle count to trade away from that, because then we'll be reacting from the Nano Range and then also reacting from the bottom edge of that 15-minute 0 candle. And then we're going to try and trade down to the DCR. We have price touching the Nano Range. So I'm going to start looking for price to show a candle count on our candles from this area of interest to go lower, confirming that the narrative is switching bearish. I'm going to take this candle as my 0 candle. It reacted from the Nano. It almost closed below this candle, so I'm going to see if we close below it or start going above it. Okay, so within 3 candles, we haven't closed below it, so I'm going to wait. What do we see here? This candle just had a candle close to go lower. That's our first indication that price is changing direction after touching our area of interest. I'm going to go in for sells, put my stops above that same candle's high. And then I'm going to target my DCR. I know this trade took a little bit longer, but I need you guys to understand that this is just how price is going to move from our premium to the discount, which would be a top of an edge of a profile, reacting to the drawn liquidity, which would be the DCR. One thing I didn't use in my trade example was standard deviation. This is how we could have applied it. Specifically in manipulation, we had a reaction from our reversal area up to the 1.5. But the issue is when we wanted to trade, I was already looking to go below that area. So once we confirmed below that area, where did price react from and continue the movement? Everything I've taught you today is free and has been summarized in a Notion, and the link is down below. If you guys enjoyed and found this video helpful, please leave a like, subscribe for more videos in the future. A lot more ideas are going to come through, so you guys will be educated and always stay ahead of the game. Thank you guys so much for watching, and I'll see you guys very, very soon.